for everybody attending, thanks for being a part of the meeting today. Hopefully we get these things pretty streamlined and you find these helpful in terms of changes that are taking place and updates and so forth. One of the things we wanted to discuss today and describe to you is an email that Steve and I have created. RIC has said grace over it. That is a pre-approach. It's short and sweet. And what I will do is after this meeting, I will forward this, an example of that, to everybody in attendance. And it's been pretty effective. We've gotten some hits from it. So it may be something that you want to use in your own prospecting efforts. Okay? So, Steve, I will take care of getting that out to everybody after this meeting.
Fantastic. Well, let's go ahead and get started. What I'm going to do today is I'm going to basically go through some of the basics once again of how the program is being presented to the trustees to give you an idea of some of the refinements and simplifications we've made to make this both easier to present for you as a policy check advisor, as well as for the in our presentation to the trustees. So on this first page, we're zeroing in on the key components of the process. Originally, we were focusing in on the 4 documents, but the 5th element that we've added is data track, which tracks all the related activity and policy activity for the trustee through RIC's data track database TRM. And in addition, they can upgrade if they want, and this can handle crummy letters. It can do virtually everything they need to do as a trustee. As a matter of fact, the way that we're sitting right now, we could just about virtually replace a trustee department as far as it relates to reviewing and overseeing life insurance. But the first component, the policy reviews. The policy review is executed by RIC. It's a third-party independent analysis, and that's virtually done on every policy in their database. The second step, the restructuring analysis, is applied only to policies that are predetermined to be at risk based on the review done in step 1. Replacement analysis is going to be performed on each policy where a replacement is indicated through the restructuring analysis. In other words, if we indicate that through the restructuring analysis that a new policy option is more viable than a current policy option, then at the end of the underwriting process, before the policy is placed, we provide a replacement analysis. Once again, this is third-party independent document that they can store in their data track. Fourth component that we've added, and this is new this week, and you're going to really like this, is we've created what we call a policy summary. And the policy summary serves basically several functions. The first thing it's going to do is it's going to enable the trustee to document, along with us, what happened along each step of this process. In other words, it will determine if in pre-underwriting, if we determine whether or not this insured is capable of going through underwriting based on any previous knowledge the trustee has. And we then go through each of the steps in determining insurability on that particular client if we decide to move forward. In addition, it's going to show whether the client elected to resolve his issues with a current policy solution, or whether he elected to move forward and attempt to replace his policy with a new policy. And this will all come clear as you see these new documents. All 4 of these documents and all the activities tracked in data track, which the trustee has 100% access to. It's no additional cost to them, and they can basically have this available for regulators so they can show each step of the process that they went through to determine how to handle each policy issue in their database. So the first step is we do the policy review, and the objective, once again, of the policy review is to determine if the policy is at risk. If the policy is not at risk, then you can follow the flow chart down to the left, and you can see that that information gets deposited in the data track. It's available for the trustees, and next year when they do another policy review, there'll be a second one in data track just with the new date. If the policy is at risk, that's where we move into the restructuring analysis. And the restructuring analysis, win, lose, or draw, is always uploaded into DataTrack for the benefit of the trustee. When we complete a restructuring analysis on a at-risk policy, Greg Kaiser, who's the Senior VP of RIC, and myself will schedule a call with the trustee to pre-review every single policy that's at risk, whether it's replaceable or whether it's not replaceable. The first information that we want to gather from the trustee from this restructuring analysis overview is, does he believe the client is insurable, or are they aware of any significant health changes since the client took out the original policy? Generally speaking, with the smaller banks, regional banks, where the trustee usually is working anywhere from 5 to 15 policies, and if there's more than that, there's usually another trustee working that, in that same database. But on their personal clients, they can generally tell us whether the client's had cancer or heart problems or has been in the hospital or is basically healthy at the outset. So if we determine initially, for instance, that the client is uninsurable, maybe she's been in and out of the hospital and now has diabetes and heart problems, and we decide that we're not going to move towards a new policy solution, then we would move towards the right, and the next step is to determine whether or not we're going to modify funding or face. Now, I'm going to go back to this and describe, and you'll be able to see on the new policy reviews how this decision is easily made for the trustee as we roll through this. But once again, if the insurable is, or the insured is not insurable with the new policy, we decide to modify funding or face. Those options will be on the current policy options on the policy review, and the modification be made. That would be documented on the policy summary, and the letter would go out to the carrier requesting a modification of funding or face from the trustee in coordination with the insured, and be documented in the summary. Going to the left, let's say that the trustee indicates that yes, this client is most likely insurable and could endure an underwriting process. Then the same question occurs. Now, if they're uninsurable, they only have two choices to get the policy in an adequately funded state. The choices are they can either increase the funding, which means they need to pay more premium so the policy will achieve maturity age, or they need to reduce the face so that the current policy is adequately funded at that new face amount. The objective of the trustee is to get 100% of their book of business in an adequately funded state, because that's what reduces liabilities, that's what's best for the trust, and that's what's best for the beneficiaries. So going to the left, the same questions apply, but also to a new policy. So if they're insurable, they basically have now four choices. They could modify the funding or face on the current policy, or they could determine the correct funding amount or a reduced face on a new policy. So that's the next decision point that we need to make, and that is determined in part by how competitive the restructuring analysis is. So for instance, if the new policy would be extremely competitive compared, or there's a compelling reason to make a modification, and they choose to take the new policy direction, we would go that direction. If the restructuring analysis showed that it was not competitive, then it would follow the flow chart here, and you can see where it says no, and the same thing would occur. The trustee would notify the carrier that we want to reduce the funding or modify the face on the current policy, and that would all be noted in the policy summary. So if they do determine to go for the new policy, we would execute a HIPAA, maybe take an initial application based on the carrier that we determined was the most competitive in the restructuring analysis, and go through the underwriting process. So obviously, on the left here, after we've determined we're going towards this direction and making the determination on funding or face for the new policy, that would require a restructuring analysis overview, and by contract, we're requiring that the trustee complete that within 90 days of the life track, the policy review, the beginning policy review. Otherwise, that policy would be deemed incomplete, and the trustee would actually receive a chargeback for that, which would generate a credit to be used towards future policy reviews with another institution. In the event that we complete the underwriting and we successfully get an offer from the carrier, we would then complete a replacement analysis. And then the replacement analysis would be, the information from that would be added to the policy summary. So now we've collected exactly everything that occurred. So we check everything that applies. The insured was initially determined to be, through pre-underwriting with the trustee, was determined to be insurable. Maybe the insured determined that they would like to take a new policy with a reduced face, and the replacement analysis concurred that the replacement was valid and was better for the insured, the trustee, and the trust. And we note all that the policy was accepted, verified, and placed by the trustee, and then we would note that in the policy summary. These are simple check boxes, as you'll see here in a few moments. And then the last step is all that data, the policy summary, the replacement analysis that includes all the different steps that were taken, would be uploaded into DataTrack, giving the trustee all 4 documents, a complete flow, everything A to Z that they needed to take this policy from a current inadequately funded state or non-competitive state all the way down and follow every possible lead all the way down to the best interest of everybody involved. So the final objective is through the 5 components of the policy check system. The before represents the policies that are at risk in the database for the trustee, and the after is, conceptually we want to reduce your risk or minimize your risk so that there are significantly less policies that are problematic. So the next part I want to pull up here is the restructuring analysis. We've continued to modify and simplify the restructuring analysis, and more importantly is all these pieces tie in to each other. So you'll see here that the format follows the flow chart, and that the first option, so the first page of the restructuring analysis just covers the basic information, the original underwriting class, which is what we compare to on the restructuring analysis, and that this particular policy was 65% chance that the policy would lapse, or that the insured would still be alive when the policy lapses in 2023. So that shows that this policy is inadequately funded. So then we take a look at the current policy options, and the first part is a baseline comparison with the current policy. Once again, based on in-force, the policy will lapse in 2023. There's a 65.33% chance that the insured will still be alive in 2023. So when we take that home, this particular policy was Lincoln Benefit Life, $1 million space, $3,000 premium, and the duration age in 2023, she will be age 87. So under the current policy options, the next thing we look at is modified. Because remember, our choices are modify funding or modify face. So modify funding means adjust premium using the current face, which is $1 million, so that the policy is adequately funded. How much money does that take? Well, based on the in-force and the analysis from RIC, that's going to take $25,505, and then that will carry the policy to its maturity age, which is also a problem, of age 95. The next part we want to look at is maybe she can't afford, because currently she's paying $3,000 a year, she can't afford $25,505, so we take a look at modifying the face with the current policy, which means adjust face amount using current premium so that the policy is adequately funded. Well, the face amount adjustment would need to be from $1 million down to $482,000, and then she could maintain a premium of $3,000, and that would result in an adequately funded solution. So the key thrust here that you need to be thinking about when you're working with a trustee or you're talking about this concept to a trustee is they have a database of policies of which anywhere from 40 to, we've seen as high as 60% are some combination of inadequately funded and non-competitive. And this number has continued to rise in the last 12 months. And you know, if you're tracking the basic trends, the low interest rate environment is going to continue to increase the number of policies with each individual trustee that are inadequately funded. It's just basically it's mathematics. So there's a place down here for current policy notes. It shows an alternate illustration, assumes annual funding at $2,505. We'll mature the current policy with a cash value of $1,468 at age 95. Reducing the current face amount on an existing policy to $482 would provide adequate funding coverage to maturity. So we have space there. We can add all kinds of different notes depending on the complexity of the situation. And then there's an asterisk down here, and this, once again, this is designed to make it stick simple for the trustee to understand the objectives and what we're doing. The current policy options are designed to define available options if the insured or insureds is or are uninsurable, or the current policy outperforms the options available in the marketplace. The current policy options and the new policy options are calculated using the exact same parameters. So on one page, they can lay this one page out, and this is virtually everything that they can do without doing backflips. This is the, let's just say these are the basics that they could do to modify this current policy. Obviously, there's always other things that you could do. You could sell the policy, you could cancel the policy, you could take out you could take a policy loan. There's a number of other minor things that could be done that could change the status of the policy. But in general, these are the simplest primary options for making that current policy adequately funded. Going on to the second page is new policy options. Once again, the top part of the page begins where we did with the other one, with the baseline comparison. I won't go through those numbers again. The second block says determine funding for the new policy. We're not modifying the funding. We're actually determining the funding. And this means that we're going to compare new policy premium amount with the adjusted premium amount from current policy. So the North American had $1 million face, and this actually be the, yes, the current premium amount. It'd be the current face amount from the current policy. I need to modify that. The North American had $1 million current face, and which is the same as the original policy, and that would have a required premium of $11,985. And instead of running to age 87, this would run to age 120. So the potential premium savings based on current face would be $13,520. Now, we're not comparing to the $3,000 because that's an inadequate solution. What we have to use as our benchmark is an adequately funded policy. So assuming that the trustee and everybody wants all the policies to be adequately funded, our comparisons are always going to be against that baseline of being adequately funded. So $11,985, $13,520 savings. Now, remember, we could reduce the face to $482 on the current policy, determine face amount new policy, compare new policy face amount with adjusted face amount from current policy. Well, the adjusted face amount at $3,000 was $482. The adjusted face amount with North American using $3,000 premium would be $758,178. So the potential coverage increase based on current premium would be $275,223. So we can either dramatically increase the reduced face amount based on the $3,000 premium, or we can save $13,000 premium versus getting the current policy adequately funded. So the new policy notes, subject to underwriting, a new policy through North American illustrates significant premium savings or substantially more coverage if the reduced face option is selected by the insured. And then down in asterisk, the new policy options are designed to define available options if the insured is insurable, and the new policy benefits outperform the current policy enough to warrant underwriting. The current policy options and the new policy options are calculated using the exact same parameters. This just summarizes the documents, just like the previous market evaluation did. So once again, the restructuring analysis follows the track on the flow chart, reviewing after we determine insurability. We then review current policy options or new policy options. So a simple way of thinking about it, if the insured is uninsurable, we're only going to be able to work from this page. If they're insurable, then all 4 of these options, both new and original policy options, are available to work with the trustee and the client. The main thing is we want to keep this really simple, down to 2 to 4 options total to discuss with that trustee, and not 300. The last component here to go through as it relates to what we're talking about is called the policy summary. So the policy summary wraps up all of our activity. The first page is similar to the other pages, although there is one key distinction. This has right here the policy review date, and on this one it was 9/18/2013. And then it has a policy summary date, which is 12/18/2013. What this means is that this is our teeth in the contract, because the trustee, by contract, needs to complete the restructuring overview with us by no later than 12/18, or the review will be considered incomplete and not subsidized by policy check. So the basic information is the same. We go down to the second page. So remember, the first step on the flow chart after or while we're reviewing the restructuring analysis is to determine, are they insurable or not. So determine insurability. So pre-underwriting evaluation. Based on preliminary evaluation or trustee knowledge, the insured or insureds have or had no significant health changes since the original policy was on. So based on their best knowledge, there's nothing here to prevent moving forward in the event that they wanted to apply for a new policy. The second choice would be based on preliminary evaluation. The insureds are not a good candidate for medical underwriting due to significant health changes, or obtaining age 85 since the original policy was underwritten. At age 85, most carriers automatically downgrade any new policy to standard, and so if anybody had a original underwriting class greater than standard, the odds are we're not going to be able to beat the original underwriting, and they're not part of the policy check process. Additionally, policies under $100,000 are not subject to the policy check process. Any policies that are bank-owned or policies on bank employees, former or current, and any policies that the trustee has flagged up front that have a pre-existing relationship with an agent that they feel would hamper or minimize the ability of policy check to underwrite the policy and complete its process. So those policies will not be considered part of the policy check subsidization program. So the next part, application and pyramid. Now once again, this whole component, the policy summary, is completed after we're done with all of our work. It's the last thing we do before we close the file for the year for the trustee. The insured applied for a new policy, completed HIPAA authorization and pyramid examination to determine underwriting class, and then ultimately the underwriting decision, they were either approved or declined for coverage. So that's the determine insurability. Once again, this is done at the end of the day. Current policy options. Okay, because they decided to move with a new policy, none of these would be checked. If they were uninsurable, then we would have them either choose to modify funding or modify face or decline. After being presented the available policy options from the restructuring analysis, the insureds have elected to decline any modifications that could result in improving funding for the funding adequacy for the benefit of the trust. So basically, we want to force that card, because no decision is a decision, but we want to make sure that we're able to review the restructuring analysis with that insured to make sure they understand what they're accepting or declining. And then current policy options, if they did make a modification, a request to modify scheduled premium or reduce face has been submitted to Lincoln Benefit Life, the policy will be reevaluated on an annual basis. Incomplete, the insured has declined to respond or has not fully presented policy options from the restructuring analysis. And then there's a place there for notes, and I just have some miscellaneous notes. Okay, so new policy options. On this particular case, modify face amount. After being presented the available policy options from the restructuring analysis, the insured has elected to apply for a new policy with reduced face amount, so that's checked. Replacement analysis. An independent replacement analysis confirmed that after underwriting considerations, the new policy provides more value to the trust. Check. New policy verified in place. The new policy has been issued and accepted by the trustee. the original policy has been canceled and the cash values have been properly 1035 exchanged into the new contract. If it wasn't accepted, a new policy has been approved by the carrier but not accepted by the trustee. There's a check for that. Then this last one is the one that could result in a trustee chargeback, and that is the insured declined to respond or did not participate in a restructuring analysis overview with the trustee and the policy advisor. So that's checked. This gets uploaded into DataTrack, and we will bill the trustee so we can all have a credit to be applied in the future. So the purpose of this, obviously, is one, we want to have some teeth in the activity, make it extremely clear as to the process that we intend to follow with each of the insureds that have a competitive restructuring analysis, and provide the trustee the documentation they need in the event 2 years from now a trustee is being having their accounts reviewed by a regulator. They can pull out the policy summary, and then they have all the documentation in the review, the restructuring analysis, and the replacement analysis to back up each one of the check boxes that are completed here. So I know that's a lot of information. We're moving rapidly toward a complete systemized approach for basically a punch approach on the marketing. Mike has developed a very nice intro email that he's using with already some success. We've already got a presentation lined up with a trustee today on Mike's initial emails. That's a great intro email, and that attaches the brochure that we've developed that I think we reviewed it last week. And then there's going to be a second follow-up email that we're going to provide for you next week, that you can go ahead and start with this intro email. Then the second email has a more detailed overview of the process, and then at that point, the best practice would be to follow up with a phone call to say, hey, we've sent you a couple emails. I just wanted to follow up and see if you've had a chance to use our quoting engine. So, Mike, did I cover the quoting engine last week or no?
Hey, Mom.
You did in a very general way. I think probably just showing it very quickly that it's available on your website and going through it quickly would probably be helpful.
Okay. I'll focus.
Let's see here. All right, so essentially the quoting engine on the front page of Policy Check, the objective is to get them to click on here and generate a quotation. A lot of these smaller trustees are very price driven. They have a certain amount of dollars that they take in on their trustee activity every year, and there's an increase in expenses when they have to pay for policy reviews. So obviously we subsidize them in the first year, which creates a substantial advantage, but most of them are interested in how's this going to work long term. So it says here, click here to start your quotation. And so for instance, when XYZ, state Arizona, we'll say Bill Jones, the email.
Hey, Steve, while you're doing that, Jill has asked if you would be willing to provide a copy of what you just reviewed that they can use, that she could use in her presentation to a trustee.
Yeah, the different components I will. The flow chart presentation, I can provide the complete flow chart, but that's actually our trustee presentation, and we want to say that you're always better to let RIC and myself present the flow chart and have that be the component that you hold back from them to get a presentation. We want to kind of tie all the pieces together, and if everybody's presenting the same thing, then there's no reason for them to do the WebEx, and we've proven that that we get about an 80% close rate when RIC participates in the WebEx with us, and it goes down to about 10% when it's done scattered. So in this particular example on the instant quote, Insurance IQ, I'm using that as the current firm, and let's say they have 100 policies, and I can learn to type, And let's say their cost per review is $175. That's a good average cost out there for reviews. So they click submit on that, and then that's going to auto-generate a policy check quote. And it's going to email them to the email of record. Mike, do you want to take over the screen for a second while I locate my email?
All right. Yep.
Okay, so I got a notice from there. Now let's see what else. Mike, why don't you review the language that you got on the, actually I got it already here. Okay. So let me take back over the screen. Or do I still have the screen, Mike?
You should have it now.
Okay.
You should have it now.
So they clicked here to generate this, and this is what was emailed back to me. So this is done. Myself and RIC are notified, and if it's a bank that you're working with, when you send out the emails to a bank, we want you to copy support@policycheck.com so we can see the activity. The best practice on this is to send out 5, 10, 15 of these emails at a time and follow up. We do not want just mass blasting to every trustee in the United States. It's not professional. The way that we're finding this works the best is if you actually send a separate email to each one of the trustees that you're attempting to contact. So they complete the policy quote. It generates a quote, policy review quote. It has their name up there, the name of the current review firm, and then it shows their costs because we selected $175 a month on their current policy. In year one, if they have 100 policies, they're going to spend $17,500 in year one, $17,000 in year two, year three, year four. The 4-year total cost $70,000. Now, if they were to just contact RIC and pay for the reviews, essentially here would be the cost. They would do all the policies in the first year, and that would cost them $17,500. And then the way RIC works is they do, after the initial, they do high-risk policies every year, medium-risk policies every 2 years, and low-risk policies every 3 years. So they've determined that 60% of the policies are high-risk, 20% are medium, and 20% are low. This is based on industry averages. So in the second year, they wouldn't do 100 reviews, even though they have 100 policies. They would just look at the 60 that are high risk. So it would be times 175 or 10,500. The third year, they would do the high risk policies again, plus the 20 that are medium risk for a total of 80 reviews at 175 for a total of 14,000 that second year. Then in year 4, they would do the high risk policies again. They wouldn't do the medium because that's every other year, but then they would do the low risk, which is also 20, and they would do 80 reviews. So bottom line is after they get into flow, they're basically doing 80% of the policies every year on average. So it ends up average cost per policy is $140 per policy. They're doing an average of 80 reviews a year, and the total cost over 4 years is $56,000 versus $70,000. Okay, now let's take a look at RIC with risk-adjusted pricing, which is what we described here, the risk-adjusted pricing, with the policy check discount. So year 1, because it's 100% subsidized, they'd have 0 cost. Year 2, it would follow exactly the same as year 2, 3, and 4 with RIC with the risk-adjusted pricing. But because of the subsidization of our program, their average cost over the 4 years drops down to $96, or a total over the 4 years of $38,500. So the potential savings, year 1, they'd save $17,000. Year 2, they'd save $7,000. Year 3, $3,500. year 4, 3,500. So their 4-year savings is 31,500. Plus, they're going to pick up these additional cost-saving benefits. They got the policy review, which they have with their current firm, but they're going to get the restructuring analysis, the replacement analysis, and now I need to add into this because we just built in the policy summary, and the policy summary, which they don't get with their current, and they're going to get with this. So we provide some substantial benefits. So the idea is, if in your activity as part of your marketing, in addition to the brochure, in addition to the email, in addition to the more detailed overview, you then can get them to do a current policy quote, or even get them on the phone yourself and say, I can go ahead and fill this out for you for quote. Who are you using now for your reviews, or what are you spending internally per policy, how many policies, and submit, have their email in there, and it's going to send them a copy. So you can kind of force the quote if you want to use it that way. But on the website, we have the quote. The quote tool is on the top of every page. We go to the problem area, and describes the inadequate funded life insurance as problem area. We've got the OCC updates. So again, we're driving towards getting a quote because that means that we have somebody that's interested enough that they're making a comparison. And then here's a key components page, and this actually has the summary that we were just talking about, or that Jill was asking about. It's under the key components on the website, and you can see this. And then over on the left, you follow through, and it talks about the policy review, the restructuring analysis, the replacement analysis, the policy summary, and data track. So anytime you need to briefly overview and get yourself educated on what the key components are, it's right there on the website. Everything you need to market is actually right here. If you need to overview what the problem is, the interest rate issue, briefly review the problem page and get yourself up to speed, on that concept again. The OCC updates page, this is the August 2012 updates, which is relevant because the OCC updated the responsibilities of a trustee as it relates to life insurance. I won't read that to you, but in your spare time, you maybe ought to go through that and at least read the highlighted sections so you can get a feel for the kind of regulatory pressure that they're experiencing. I generally don't try to convince a trustee as to the regulatory issues. This is their industry. The banking is their industry. They're in constant contact with state regulators. If they're FDIC regulated, they're in contact with them. If they're OCC regulated, they're in contact with them on an annual basis. So they're aware that they have responsibilities. Our job is just to make it very cost effective for them to solve it and provide them key documents that they're not currently receiving. So I think that pretty much covers everything that we have today. Mike is going to send out everybody on the call a sample of the email that he's utilizing. Once again, copy support@policycheck.com on the banks. We just need to be very, very, very professional in our approach to this, and we don't want you going way off in left field with what you're telling these trustees, because it's a large marketplace. There's over $1 trillion of policies, but it's also a very small marketplace in that bad news will probably travel a lot faster than good news through the 2,000 or 3,000 banks that are trustees. So with that, I'm going to go ahead and wrap up the call. Mike, do you have anything to add?
Yeah, a couple of things. Number one is the data track. The Policy Check Advisor is password protected access to that, so they can watch the process take place as well, correct? On their bank?
Who can watch the process take place?
The Policy Check Advisor.
No, the only people that have access to the data track are the actual trustees. I can get the documents uploaded in the data track, but it's the trustees' secure environment for them.
Okay, so what's the way that you're communicating with the Policy Check Advisor on what's taking place?
Well, the Policy Check Advisor, after the initial overview with the insured and the trustee that's performed by RIC in Policy Check, once the trustee has agreed initially that this needs to be presented, then the Policy Check Advisor would be involved in coordinating with us or with me and the trustee to present to the insured and the trustee at that point. So at that point, the trustee has given basically his blessing that we're moving forward towards presenting this to the insured. And now at that point, then it's based on whether the insured wants to come into the office and meet with the policy check advisor and the trustee, or do a conference call or a WebEx. So, essentially our attitude is that when we get down to those handful of policies that are that valuable, we'll do whatever it takes based on what we need to do with the insured. Sometimes we're going to be forced into a WebEx or a conference call because, for instance, we have a trust company in Texas, and maybe they have an insured that's in New York, which is a current situation we're dealing with now, or one in Nevada. So you kind of just have to do whatever it takes to work with the trustee to make sure that we can overview this information with the trustee and the insured. The reason that we go over the reviews with the trustee up front is we want the trustee to be very clear that there's distinct benefits for this insured, and kind of basically obligate them that now that they know that there's a better path for the insured, they're basically obligated at that point to go ahead and set up the next step. So it's at that next step, and then the policy check agent through secure email will be provided all the restructuring analysis and all the different components, that are part of that presentation to be prepared for that.
Okay, I will get the I'll get the email out to everybody, and if you want, we branded the policy check brochure to me for you. So if that's something that you're interested in having your brand added in the corner down the bottom, then just let us know and we'll do that for you.
Okay,
and that's
Mike.
all I have. Huh?
All right. Thank you, everybody, for